UMA is going vertical, more than 80% in the last 24 hours alone. In this video we are going to look at what caused this rally. We're going to look at data that you've probably never seen before. The price of the Chainlink competitor is literally going vertical. And one might guess that this could be manipulation because there's a lot of trading happening on centralized exchanges, not just on the spot market, but also the perpetuals futures market is interesting. More than 20 million of open interest on Binance alone, more than 300 million of trading volume in the last 24 hours. And that's while the market cap is 276 million only. So more than every token has moved hands in the perpetual futures market in the last 24 hours. But the story isn't actually that simple. Let's have a look at on-chain data. Let's have a look at fundamentals. Let's see what could be behind all of this. You will not see me go through the website and present you with information that's obvious that everybody else is already picking up. We want to get a market edge. And so let's have a look, for example, at developer activity. How much activity is there currently in the GitHub? How many changes are the programmers of UMA doing? And this is fortunately positive. An update 10 hours ago on UMA.xyz. Another update on the protocol 11 hours ago. An update even for the documentation 14 hours ago, etc. So there is real work being done, and constant code changes of course potentially means new projects being launched at some point. Now here's something I very much like. The UMA team has published a Dune dashboard. So directly on the website there's a link at the top to look at the statistics, and the statistics are all 100% transparent. Because all of this data comes directly from the blockchain. So for example here, this ever-increasing total value log chart, it comes directly from converted blockchain data. This is very, very transparent. The charts tend to go up into the right, so that initial impression that we had that this is maybe manipulation could actually be wrong. Maybe finally the market is realizing something. Now I've built a tool that I very often use on this channel. This tool looks at what are currently retail investors doing versus what are the whales doing. I show this in almost every video on this channel. And this is very, very useful data because it shows us what the smart money is doing. On the left side, we've got the number of wallets that hold at least 100 UMA tokens. So it's currently $380 roughly. In the middle, we go one order of magnitude up. So that's 1,000 tokens. So a bit under $4,000 worth of the token. On the right side, we've got the whales. So this is now 10,000 tokens, almost 40K worth of UMA in the wallet. Now, isn't that interesting? This massive dump over here. This happened in February of last year. Have a look at the UMA price in February of last year. It was still at around $7 or so, just to then go down all the way to $1.50. Now, the whales started accumulating again, beginning in August of last year, and that was over here, right? Pretty much the bottom. Let's look at this on a logarithmic scale. Here we go. This is where the whales bought, and they're up more than 100% since then. And they are still not selling. Now, those are all long-term charts. Those are daily charts. Each of those data points is a day. But we can also look at the hourly chart just for the last 30 days. It's nice that we see an accumulation from all fronts here. Small retail, medium-sized retail, and whales. Everyone is buying here. Now, this is not your typical shilling channel, right? If I simply just wanted to sell UMA to you, I want to buy early and then sell this to you, pump up the price, then I'd finish the video here. But I'm not like that. I want to show the pros and the cons. And here comes a chart that is not pretty. This is also a UMA chart, a very long-term UMA chart. This chart starts in September of 2020. And this is not UMA in US dollars. This is UMA relative to Ethereum. So unfortunately, had you bought UMA at the end of 2020 and you held all the way to today, including the rally, you'd still be down relative to holding Ethereum by 96.5%. And this trend is very consistent. Where does all the sell pressure come from? I don't know for certain, but there might be the following contributor. There is token minting happening over time. This is not super rapid, but the supply definitely is expanding somewhat. It grew by 17% or so in those 4 years. It doesn't explain an underperformance of 96.5%. But it was definitely also not good for the price development. Now here's the $1,000,000 question that I cannot answer for you. Does it make sense to buy UMA potentially for short-term trading, right? Currently momentum is very bullish and all the wallet cohorts are buying. Long-term, buying this over many, many years, I don't know. Fundamentally, it's very, very hard to disrupt the Oracle market. This is what Yuma is trying to do, right? Yuma is directly competing with Chainlink. The reason why competition is so stiff is because very often the data that is used for those oracles have a lot of weight to it. For example, the data of Chainlink is used to estimate how much is collateral worth for a DeFi protocol. Now, if you make a mistake there, just a temporary mistake, and you overestimate, for example, how much is your collateral worth, right? What's currently the price of Bitcoin, and you give a wrong answer, then this can potentially drain the entire funds of a DeFi protocol, of a borrowing lending platform. So data reliability is hyper important, and you don't want to toy around with this. And so I've got the impression that Chainlink has pretty much successfully monopolized that market. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. There's also a free Telegram. Link is down below.